Hello, can you hear me? How's everyone doing? Good? Okay. As the introduction said, I have the opportunity to do the next panel, which I'm very excited about. When Sloan asked me if I would moderate this panel, I said yes, even though I went to HBS. I thought, I love MIT, so I'll do anything to help out MIT. And I love the opportunity to talk to titans in the finance industry, especially when I don't have a director in my ear telling me to cut to commercial break. So I'm really looking forward to this conversation. I do understand that I do have to keep to time because we have a very important guest at 3, so I will make sure that I do that. Let's just first start off by talking a little bit about what this topic is. We're thinking about financial organizations in the future, and I did have some flexibility on what that is and how I want to take this conversation. I have the opportunity to speak to hundreds of traders, executives, strategists, economists, etc. And to answer the question where a financial organization is going in the future, I think it's important to think about where they are today. So this is a slide I want to share with you. Can we roll the slide? So just take a look. Apologize that there's no Delta or Greek letters, but there is Greece on there. And while I probably can't show this on TV, I figured I could show it with you distinguished individuals. So this is what I think the world looks like now. And hopefully within the next hour, we can talk a little bit about where we think the world is going to go. Clearly, emerging markets have been a huge focus. The past 5 years, we've seen a lot of evolution in the way that financial markets used to work. I know when I first joined the trading floor back in 2005, the world looks very different than what it would look like now if I had worked on the trading floor now. So let's just talk a little bit, and we'll just go, Chiwon, you can start first, and then we'll just have both of you guys comment. The world is different now. Post-crisis, what has changed in the next 10 to 15 years? What will change going forward?
Sure. Hello, everyone. Can you all hear me okay? Very good. Now, before I get started, I just want to sort of make sure that the views that I'm expressing today are my own views and not necessarily those of UBS, so I can speak much more freely. Just in terms of what has happened since the crisis, I would say that banks have been very actively deleveraging their balance sheet over the course of the last 5 years. They have actually reduced their risk profile quite significantly. And if you take a look across the landscape today, I would say that the banking industry has evolved to a point where now you're beginning to see some divergence in strategies. So for instance, if you take a look at the 10 largest banks, say 5-6 years ago, they were pursuing predominantly the same strategy. They used to have an investment banking operation, perhaps a retail or wealth management, and then an asset gathering business as an asset management. And they were essentially pursuing very similar strategies. Now, you'd be hard-pressed to find in any industry where top 10 players essentially have the same strategy. I think what we have seen over the last couple of years, or 4 or 5 years, is as the deleveraging continued, I think players are beginning to play to their strengths. So you're beginning to see some divergence of strategy across the industry. So just to give you an example, for UBS, the firm that I'm associated with, we have effectively retreated from all proprietary trading activities. So as a bank, we don't do any prop trading. We don't trade for our own account anywhere. So the entire resources of the institution of 60,000 people is effectively dedicated towards client business. Now that's the model that we have chosen to adopt. Others will play to their strengths. So for instance, perhaps another level of granularity, I would say that we have decided to de-emphasize long-dated fixed income business and focus much more on the traditional advisory business of investment banking and equity business. Others will perhaps focus more on fixed income and less on equities. So you're beginning to see that divergence of strategy taking place in the industry. And I suspect as a regulatory environment continues to evolve, you will see more of that divergence taking place. As for the future, I would say it's a bit early to tell, but my sense is the regulatory landscape today has to change. My observation is that prior to the crisis, we had these global regulatory bodies essentially advocating global consistency across borders. Since the crisis, I think most of the regulators have tended to look inward into their own domestic economies and created their own regulatory firewalls, sometimes to the detriment of the stability of the overall market. And I think that pendulum has to now begin to swing the other way, and hopefully we'll see a bit more harmonization of regulation across borders. Once that happens, I think my personal view is that the industry will actually, as I said, continue to diverge into their differentiated strategies, and hopefully you will see firms focusing predominantly on wealth management business, others focusing more on pure investment banking, and others on more of a commercial banking and corporate banking type activity. So I think we are all kind of going back to our roots as an industry. And my personal view is that the industry going forward will look more like what the industry looked like in the 80s and 90s in terms of how the banks begin to operate in a state-to-state environment going forward.
Great, okay. So I don't work for a big bank, and so I don't have to not speak freely, so I will speak freely. And I perhaps will add comments along a different axis. I would talk a little bit more on the politics and to be more China-centric, if I may. Now, I think with a pretty high degree of certainty, within the next 2 to 4 years, you will see China's GDP in nominal size to be equal of that of the United States. And that's a good reference point to bear in mind. I think that will pressurize both countries as well as all the other constituency around the world to look at fundamental differences and fundamental agreements in a very thoughtful way. And they do need to look at their differences and agreement very thoughtfully. It's also with a very high degree of certainty that within the next 2 to 5 years, that oil imports from Middle East to China will exceed that of the oil imports to the United States. Again, that will have a great deal of ramification, not only in Middle East, but also around the world. So I want to put the continued growth in China in a global context, and perhaps alluding to the fact, alluding to a speculation that China is not going to go away. It's the elephant in the room, not only in Asia, but also around the world. So that's the first point I want to make. The second point I want to make is there is a big difference now in terms of the sentiment, confidence, as well as institutional challenges between the United States and China. I think it would be fair to say that in the US, there is a high degree of business confidence. There is a high degrees of investor confidence, as reflected by the market, as reflected by the business person. The same cannot be said in China. I think in today's environment, business people, and including politicians, are worried by lots of things. And you can look around your friends and neighbors in China and try to find somebody who is not worried. Very few. Some people told me that it's the children who haven't gone to the kindergarten are not worried. So I think that highlights a degree of concern that's across the board in China. And I think the hard landing, as highlighted in the slide here, is an important case to debate. But it's not necessarily an economic one. It could also encompass political, social, and other consideration. I think the third point I would like to make is what does it mean for financial institutions, and furthermore, what does it mean for financial leaders? Perhaps one simple model we can use is trying to think of the composition of a financial leader in China with two factors. They need to be very sensitive and skilled in China-specific circumstances, dealing with the different set of institutions and shareholders and stakeholders. At the same time, they also need to embrace universal skill sets, capabilities. They need to embrace more geography, more products, when UBS is scaling back, the Chinese institution, as well as ICICI of the world, Itaú of the world, need to scale up across geography, across product. So I would just add those 3 comments.
Before we get into what's specifically happening in China, Chiwan, I want to ask you, clearly there's been a lot of regulations happening. Where are we in the regulatory landscape, and are regulations enough to prevent a global crisis from happening?
Good question. I think the short answer is I don't think regulations alone will change that. But that's just to step back and take a look at what has been happening to the regulatory environment. If you take a look at the global regulators, the people that we associate with being global regulators, the BIS, the Financial Stability Board, the Basel Committee on Banking Supervision, we think of them as regulators, but in actual fact, they're not regulators. They are essentially standard setters who establish what we perceive to be best practice in the industry, and then the member states can either choose to implement that or not. So in the case of the Basel Committee, there are 27 member states, and they got together back in 2010 and said, by 2013, January 1st, 2013, we're going to adopt Basel III, which basically has higher capital requirements, liquidity ratios, and the like. Well, so far this year, less than half of those 27 member states have actually adopted those standards. So I think what we're missing is really a global regulator who looks at across different boundaries and comes up with essentially a level playing field. The issue right now, of course, is that the American banks operate to a different standard to European banks. And of course, Asian banks are kind of stuck in the middle trying to figure out which way to go. Right? So I think to a large extent, before this whole issue can be resolved, because markets are global by nature, regulations are national by nature. So the domain of the regulator does not really match the domain of the regulated. And I think that's a critical point for us to remember. In order for us to solve this global problem, we need to have global regulations that are rather consistent across the board, and we don't have that yet. And so my view is that the regulatory environment has to still evolve some more, and hopefully over the next 2 to 3 years, we'll begin to see a little more of a harmonization of regulations across different countries.
So I guess that begs the next question, which is how, clearly we're here in China, how are Chinese banks positioning themselves to be more in line with international standards?
I want to come back and just express a view in terms of the outlook for global regulation. And personally, my view is somewhat pessimistic, and I think that's partly driven by what we have seen in Europe. The challenge that Yoon has highlighted in terms of regulation versus home market is very well played out in Europe. The arbitrage of regulation across Europe, albeit being a fairly small geographical spread, has caused a great deal of troubles because, as you recall, that it's the fortress of the world that initially hit with fortress Northern Rock and also the Icelandic banks that were initially hit with subprime in a very significant manners. And to do so across the international boundaries globally will even be more challenging. So I think in spite of the necessity to embrace a global regulatory framework, I think the road ahead is certainly a challenging one. I think the experience of the last 5 years since the financial crisis, so far as Asia is concerned, I'm sure Chiwan goes around and meet with all the important regulators in Asia and will have lots of insights. But my observation is that Asians' experience this time around is quite different from 1997, 1998. Initially, they were hit by what's happening in America, in Europe. But later on, they recognized that the primary impact that the global financial crisis had on Asian financial institutions and economy are through trade links and its corresponding impact on domestic investment, on imports and exports. It has been less on the financial institutional per se. Having said that, the way that regulation globally are forging ahead is having an impact on the Asian domestic regulators in terms of how they regulate the globally systematically important banks and how they manage their local subsidiaries. The Asian central bank has to respond to global regulation in the sense that if they want their institution to go abroad, their institution will be subject to global standard regulations in a reciprocal way. So answering the question on the Chinese banks, the Chinese CBRC introduced its own Basel III standard as early as 2011. And there's a number of conjectures out there in terms of why so early. Compounding the interest spread regime is also close to its end. Third one is we know interest rate spread is over. And the fourth one, if you think about productivity ahead, I also suspect that the productivity gain in the Chinese banks is going to be as rapid as before. So the future for the Chinese banks is certainly a challenging one. The current size and the current profitability of the Chinese bank don't necessarily imply a good future for them. Now, what does the future mean? I think from what the central bank has done since 2004, give some clues about the thinking on preparing the financial system for the future. Now, people talk about the cash crunch or liquidity crunch last month as a result of gradual liberalization of interest rates. But the first partial liberalization of interest rates was as early as 2004. It was simply that the step wasn't big enough. We have been moving in that direction for the last 7-8 years. The second thing is on the currency. If you look at the major items in the capital accounts, how many of them are open? Vast majority are open, contrary to what most people say about the Chinese capital accounts. So I think those two observations will lead to a partial conclusion that a desire by the central bank and by the economic policymakers to prepare the financial institution, in spite of the slow progress, are a work in progress. The only missing part is that we don't have a timetable. Now, whether this timetable is an event related to a hard landing or whether it's a self-imposed timetable, I don't know. But I think the progress is well underway. But we do need a catalyst in order to take a bigger step forward.
In your opinion, what do you think that timetable is?
Well, I think the central bank has a view on the currency. Within the next 5 years, they would like the capital accounts to be considered technically open. So that's an important timetable. We still need to see to what extent the lending rates and as well as the deposit rates can be liberalized. And that hasn't seen a timetable. So I think to that question, I don't know what official views are.
But Daniel, are you confident the new leadership, the new regime, will be able to implement some of these policies?
We all look for a timetable, but it's the reverse engineering which matters even more. In order to liberalize the interest rates, you must make sure the domestic factor of production are more or less in line with the global standard. Your resources allocation process, your electricity prices, your utility prices has to be aligned. Now, what are the normalization process so far? We have seen the Chinese land prices has been too much inflated. We know the labor prices are now reasonably normalized. We know that energy prices are being pushed upward gradually. We know the currency are moving up. So all of this has to be done first before you can safely, perhaps conservatively, manage the next big bang change. I don't know the timetable, but I think there's enough pieces in place that's pushing this change forward.
I tend to agree. I think to put a timetable is actually rather tricky. But I do believe, and I'm convinced, that the leadership is determined to open up the capital account, to do banking reforms and the like. All the interactions that I have had with regulators leads me to believe that they are taking this very seriously. And they'll do so when the timing is right for China. They're not going to do this for anybody else other than China, right? So I think it's important for outsiders to recognize that fact. Now, before you can really internationalize the RMB, marketize interest rates and open up the capital account, I think you need to create deeper financial markets, right? The markets have to begin to operate. And I think there's a lot of measures being undertaken to do so. So personally, I think this is, if anything, there will be an acceleration of liberalization, particularly as it relates to the currency. And I think next 3 to 5 years will be a very interesting time for the development of the financial markets in China.
You raise a good point. How would you encourage your colleagues, your peers, your clients outside of China, namely the United States, to think about interacting with the financial institutions within China?
Within China?
Yeah. Are there any challenges or things that perhaps they take for granted that is pivotal to understanding how to operate and navigate within China?
Do you have any thoughts?
We perhaps have noticed that in the recent China-U.S. economic strategic dialogue, the investment, for lack of a better word, the investment agreement between the United States and China is to be negotiated, which is a very important step towards normalization of or deepening of the economic relationships. Historically, the U.S. company have been prevented from being equal partners in joint ventures, in insurance, and so on and so forth. So the leadership in both countries have recognized the importance to move the dialogue forward. And this is a dialogue that has been stalled for about 10 years. Some people suggest that this is as important as WTO. Now, why this is important? If you think about the magnitude of FDI in China, so every year China make the claim that there's about $200 billion coming to China. Let's say half of that is decent, real business investment. That's $100 billion. In other words, in the last 10 years, you had about $1 trillion coming to China, making a return of somewhere between high single digit to mid double digit. That's a huge amount of money that has been made in China. But if you improve the channels, if you improve the sentiments, if you improve the regulation to engage more of the global capitals, not just in productions, but also in services, in film production, and so forth, I think the fundamental agreement between the United States and China can only be deepening. Now, in terms of what the U.S. companies should be prepared for, I think U.S. companies are able and are capable to drive further into the domestic market. Perhaps the U.S. company can learn from the British company. There is a little story to be shared that after the Republic was established in 1949, two overseas banks refused to leave China. One is Standard Chartered Bank of UK, another one is HSBC. So they kept a small office somewhere in Beijing. They ship container foods, they ship canned food to Beijing, and making sure the staff turns up, work every day. After 1949, they want to hold on to their license because they feel at some point that China will be open again. So it's with that mentality, HSBC today in China has 100 branches. Now, Citibank, which is a very powerful institution, has 30 branches. So the difference is 60, which incidentally is the age of the Republic. I just made up that one. But I think the point to be made is you need a better investment relationship between the United States and China. I think the US businesses want to do more business in China. And I think my personal view is China is a great place to do business. But obviously you need to be persistent with the regulators and so forth. But I think those days are approaching closer than ever before.
Yes. I mean, my personal experience has been that patience, persistence, and methodical investment actually is the best way to grow the business in China. And our own experience has been that if you do that and you demonstrate that you are willing to play an important part in the development of the financial sector, I think you do get the opportunities.
You oversee 13 different economies within the Asia Pacific. Clearly, you have your eye I'm assuming you have your eyes on the frontier markets and some of these emerging economies. What are the challenges in expanding to these economies? What does the rubric look like when you think about expanding your presence there? Clearly, those are areas of the world that are going to be growing and having a very influential part of the overall financial global dialogue.
Absolutely. Right now, the frontier markets that we're looking at are Vietnam, Myanmar, Cambodia, places like that. One of the big challenges for us is China is such a large market with such a large opportunity set that we could just invest in China for the next 10, 20 years and still not capture all the opportunities, right? So
Good problem to have.
that's right. So just taking a step back and saying, how do we then, in that sort of an environment, have the fortitude and the vision to invest in frontier markets like Myanmar, Cambodia, and Vietnam is something that we have to always consider and take seriously. Because if you just look at the pure economic returns, I think the opportunity set in places like China and India are just far too large. So I think there is on top of just the metric of maximizing returns, you have to sort of also overlay the rubric of, is this the best place to optimize our footprint in the region? And so some of the decisions that you have to make are not necessarily just completely driven on return on investments, but it has to be based on a longer term vision of how you want to shape the footprint for the organization in the region.
So maybe allow me to do a 2 seconds commercial. So what China Highland does, the fund that I run, is we actually invest Chinese money in Asia, in Southeast Asia in particular. So what we have seen in those countries is some interesting developments. In Vietnam, we feel Vietnam is going to be at where China is today in about 5 to 10 years, meaning that you're going to have reflation of wages, that you're going to have cost push-ups, that in some ways will impact the trajectory of the growth if purely built upon export. But clearly there is a domestic market large enough, but it's not a country that for the next 20 years can use a simple export model to grow. If you go to places like Cambodia, go to Laos, the story are very different, much poorer GDPs and very dollarized, in spite of being on the doorstep of China, but everywhere you go, you use dollars. But those countries, I think they are extremely open. They have a love and hate relationship with China. It's the Southeast countries that has developed a trade surplus with China. In other words, we actually buy a lot of stuff from them. In a way, we are managing to export capital to them, which in a way help them to grow. If you go to Sri Lanka, this is a country that has been stored for 30 years. Lots of growth opportunity, pivotal in South Asia. So again, interesting story out there. So I think China has a unique relationship with Southeast Asia. And I think President Xi Jinping talked about this end of last year during one of his meetings I think in Guangxi actually. He talked about with the improvements of living standard in Asia, in particular with the neighboring country, China can, only by doing so, China can build its future. So I think the relationship between China and the rest of Asia is very close. As Yoon is continuing investing their money in China, we will start investing our money in South Asia.
He just did the UBS commercial for you. So thematically, I'm hearing that the ASEAN economies are important. You know, we have financiers out in the audience, bankers out in the audience. When they think about their career opportunities going forward, are you encouraging people? We're going to talk a little bit about the people component about leading organizations in the future. Are you encouraging those individuals to start looking for opportunities in the ASEAN economies? Are you guys hiring in those categories, in those areas? Paint me what that picture looks like.
Sure. If you take a look at our snapshot, I would say over the last, shall we say, 5, 6 years, the vast majority of the hiring that we have done in the region was mostly focused on China. I would say perhaps starting from about 18 to 24 months ago, we have actually begun to hire into the ASEAN markets. So that allocation is shifting a little bit towards the ASEAN region. But as I said before, I think the opportunity set in China is so large that you can still hire for a long time and still feel like you need more people.
And what are those skills you're looking for in the ASEAN communities? Are you looking for locals, or can you easily put a plug-and-play person from New York in one of these ASEAN communities, or a plug-and-play person from China into one of these communities?
Sure. I think the approach that we take is that at the end of the day, in order to have a real sustainable business, you need to have local professionals. So our preference is to hire locally. Now, obviously, in a brand new market, let's say like Myanmar, not that we're opening an office there anytime soon, but you would need to have product experts and subject matter experts who have to be brought in from the outside because the domestic market is so nascent in its stage of development. So barring those situations, I think for any of the ASEAN markets that we operate in, whether it's Indonesia, Thailand, Philippines, Malaysia, I think there's enough of a depth of talent pool that you can actually go and find somebody and train them up. And I think that's the way we have always preferred to do so. And I think, to me, that is, if you want to have a long-term sustainable business, you do need to have local professionals basically running the business.
Daniel, how do you think about the people quotient?
Well, I had the privilege of meeting some of your ex-business school friends in Sri Lanka last week, 2 weeks ago. 6 of them formed a partnership. 4 of them are from HBS. So I think people need to take risk and feel passionate about opportunity. So I think that's one important criteria. Second, I think in today's environment, globalization is very important. So for example, we see lots of opportunity whereby you can integrate a mature technology in China very well into parts of Asia. For example, China has some wonderful hydraulic oil drilling techniques that can improve the yields of aging oil field. You can do that in Thailand, you can do that in Indonesia, you can do that elsewhere. So I think there is a globalized function even within Asia Pacific. And I think the third one is trying to be engaged with the local community. For example, in the case of Cambodia, we have seen that how the banks, some of them were globally invested very early on in their venture, starting out with microfinancing at a grassroots level, even though they didn't have to do it from day one. So I feel those are very important developments, and I think the opportunity are certainly vast.
You know, New York has widely been considered the financial capital of the world, with a lot of these opportunities heading more and more east towards this part of the world. When do you think Asia will overtake the U.S., New York namely, as the financial hub of the world, or do you think it already has? And what are some of the challenges it needs to get to obtain that credential?
I think the advantage that U.S. has is that it's a very, very large market under a single roof, right? It's a huge market with a reserve currency that has one regulatory framework for that country. I think the only other country in the world that can match that size is China. So as and when China's financial markets are liberalized to a point where it is open to the rest of the world, I think China is going to be an absolutely critical market for any financial institution that claims to be a market leader, to be present in and to be relevant in. So perhaps in the early 20th century, if you wanted to be a leading global player in the world, you had to be one of the leading players in the US. I think in the coming few decades, if you want to be a leading financial institution globally, you have to be relevant and a leading player here in China. Of course, as I said, I think to some extent it depends on the pace of liberalization here in China, but I think that's an important message to take away, because whichever way you look at it, the market here is going to be extraordinarily large, and it's going to, in many ways, overshadow the rest of the region in terms of size.
I run the risk of being politically incorrect, but I'm going to say that in any case.
We like controversy.
The question of when Asia may be able to get closer to the United States or even take over the United States in one way or another remains to be a conjecture for some time to come. Being that I heard a story from some European friends who are involved in European Union, and it's about the story of how long did it take the Europeans to get together to form the union. And we speculated and asked how long would it take the Asians to get together to form some kind of a union in Asia. The answer is never, because Asians are too polite. Somebody shared the story that in the very first meeting in the European Union back in the early 1960s, the Danish foreign minister straight away started yelling at his British counterparty right away. They were literally fighting with each other. This would not happen in Asia. So without fighting, without getting to difficult debates, without doing all of that, I think Asia countries can be very prosperous in their own ways, but will be very difficult for them to come together to do something in a much more holistic manner. So I think that's one challenge for Asia, and it's cultural. I'm not sure how this can be overcome anytime soon. The second one is about China and North Asia. The three countries in North Asia, that's South Korea, Japan, and China, has too complex a relationship to deal with each other. And I would just stop right there. The third one is China itself. Now, I look forward to the comments by Professor Justine Lin later on in terms of how far can you stretch the growth curve in China and what degree of certainty you have in that growth curve. I think there's a huge amount of obstacles that need to overcome, and it will not come without cost. So if you're compounding the three factors together, so I will put aside that conjecture that Asia will take over the United States anytime soon.
I recognize that you guys aren't economists, but I know you have an opinion. Clearly, the relationship between the United States and China, as we have said, is very symbiotic. You know, the past couple of months, Fed Chairman Ben Bernanke has been pretty confusing. I think one thing is clear. He wants out of his job, and he wants out of his job ASAP come January. But, you know, the idea that they're going to end this bond buying purchase, buying bonds, et cetera, what does that mean for China, and what does that mean for emerging economies? And how do you guys position yourself for a future when interest rates are going to increase?
No, I think for sure, I think it's a statement of fact to say when the U.S. Federal Reserve began the quantitative easing, there was essentially a tidal wave of money traveling across the Pacific and being invested in this part of the world, particularly the emerging economies. And I think I wouldn't say the exact opposite will happen, but I think when the quantitative easing measures are reduced, you will definitely see the emerging economies, money basically flowing back. And you indeed witnessed that over the last 2 months. So, you know, I think the ASEAN economies are, or the stock market in ASEAN region is down about 14-15% over the last couple of months. So I think that's just math. That will happen. And of course, if you take a look further out, I think it's also important to remember that despite the fact that interest rates are very, very low today, longer term, when the Fed begins to raise rates, my personal view is that they won't be able to raise rates quickly enough to arrest inflation. So I think inflation is going to be a topic that we'll be discussing in forums like this in some years from now, not necessarily next year or the year after, but I think inflation is something that we all have to be prepared for in the back of our minds as we are looking at investing down the line. Because I think all the printing from the central banks will have a side effect, and it will also have unintended consequences, and that's going to be inflation.
I think I agree very much with what Chuan said on that, and in particular on the inflation front, we've seen Brazil has to cut rates in spite of just having 1% GDP year so far. But I think from the sort of China perspective, I would imagine this may not necessarily be bad news for the Chinese central bank, because one of the huge challenges we faced in the last 4 or 5 years is the fact that you have a very fat spread between the Chinese domestic deposit rates and 0% US rates that at the good times induce all the capitals into China, which China doesn't need. Secondly, and related to that, as a result of that spread, it's very hard to push the currency towards internationalization, right? All else being equal, nobody is going to use a high funding currency versus a cheap funding currency. So I think from the Chinese perspective, hopefully the US can grow steadily. In the real economy, you will have a nice pull on the growth of China, and people underestimate how important China still rely on global growth, in particular on the US. But more importantly, I think hopefully in that transition period, China can regain more of its monetary policy versus the last 4 or 5 years. We've really just been not locked in and not being able to do very much with the domestic monetary policy.
Okay, so we covered positioning yourself globally. We talked a little bit about the evolving regulatory climate. We talked about specifically how you grow within China and the Chinese structure. And we talked a little bit about the people component. I want to take this opportunity now to see if there's any other questions we would love to entertain. I know they would love to entertain your questions. We have one right here in the front.
Kunio Takashima from Japan. Thank you very much for very interesting presentations. Something very interesting happened in the Japanese equity market a couple of weeks ago. You know, the Tokyo Stock Exchange merged with Osaka Stock Exchange. So I'm wondering if, in your view, the same thing will happen in the other Asian markets or other global markets. Thank you.
Good question.
Sure. No, it's a good question. I can certainly see the logic behind what's happened in Japan, and I think you could easily envision those types of mergers taking place within country. But I think given the politics in the region, I think at this point, I don't think you'll end up with one Uber exchange for Asia. It's possible that, for instance, Singapore and Malaysian exchanges might work a little bit closer together and you have some regional pockets, but I don't think you're going to see something like a London Stock Exchange that kind of gobbles up all the other continental exchanges, partly because of politics. Many of the exchanges around the region are seen as sort of national assets. Not many are privatized. And so I think it'll take a long time before that happens. But within a country, to consolidate market into a single exchange platform makes sense, and it's eminently doable.
Any other questions? Yes, right there in the back, please.
Hello again. One question going back to the very interesting points on the liberalization of financial markets, which is something, by the way, that at Nottingham University here in Ningbo we are working actively on. And every time we look at the progress of liberalization in China, there's two things always come to mind that are almost a glass ceiling. One is a reduction of the spread between lending and borrowing rates. And the other one is basically handing over, like my old professor of MIT used to say, to a 25-year-old guy sitting in New York wearing suspenders to basically put the country on its knee the day he decides to short $1 trillion of renminbi or government bonds. So these two things obviously would impact negatively the profitability, which is, let's say, already problematic of the banks, narrowing the margin, and just handing over monetary policy, currency policy, which in China is very much linked to economic policy. Are these two things something that, like we said before, will never make China be opening up capital accounts and never open up interest rate markets. And definitely not by 2015. Thank you.
My view on that is it's hard to put a timetable. I mean, 2015 aside, just looking at it longer term, I think once the financial market depth in China gets to a certain level, it's hard to envision any one player or players having such a big impact so that they can actually manipulate rates or having an impact of that sort. So if you take a look at the US, would you ever consider that a hedge fund or two could actually move interest rate in the US? Highly unlikely, right? That's because the market is so deep. There are very diverse players, arbitrage players, who will basically make sure that the rates go back in line when the dispersion gets to a certain to a level. There are speculators, there are fundamental investors, there are all kinds of players in the market that essentially creates a certain amount of discipline for that market. Now, admittedly in China, we don't have that diversity of players in the financial system here. And one of the things that I think it is a to-do as part of the financial sector reform is to allow different players to participate in the marketplace. But I think given the size of the economy and the size of the capital markets that we think will be materializing in China, I think that kind of worry is slightly exaggerated. Is sort of would be my personal view. I think the markets here are, if you take a look at the sheer magnitude of size, it is just, it's hard to envision that happening. So if you take a look at a small market like Myanmar or Vietnam, yes, I would worry about that, but not in China.
Next question.
Hi, a question here. Yeah, I would like the panelists' comments on one of the questions I often ask myself. So do financial institutions really add value to the economy? So if you study the history of the international or financial institutions, so you have found basically these institutions fool around for a while and then mess things up. And then they say, I'm sorry, so government, you need to bail me out. So, yeah, if you look at history, there's no exception. Okay? Goldman, including UBS, and the others. So what do you really think then? You see, from your heart, do you think they really add value? So, thank you.
Okay. Can I ask you to ask that question to Professor Merton when he shows up later this afternoon? In my heart of hearts, I do believe that. I believe that the financial institutions, the role of a financial institution of helping the real economy become more efficient is a very important role. And in fact, if you look at what happened over the last 5 years, it shows you what happens to the world economy when that doesn't work as well as it should. So my personal view is that banking serves a very, very important purpose in society. And it is true, I believe, that the banking sector had lost some of its plot going back 10, 15 years. And as I said, the industry is going back to its roots. And once it does, I think it is there to play a very important role in the development of any economy, particularly the emerging ones.
If I can I just ask a follow-up question based on that? I get asked this question often. It's a controversial one in the sense that if you take a look at what's happening in the United States, if you've been following the Fabrice Touré, the Fab Touré guy from the Goldman Sachs, it's clear that not one single person from the financial crisis has been put in jail. Do they belong in jail? What are your thoughts on how there hasn't been anyone really held responsible? And I know what people think of the media and the press, because I've heard it all too many times. But, because you're speaking from your heart of hearts, so I'm curious
Yes.
to share your opinion.
Well, I think if you take a look at what happened through 2000, say 6, 7, and 8, leading up to the financial crisis, there are many parties who are culpable. And I think over the last 4 to 5 years, there's been a lot of criticism directed at the banking industry, the banking community as a whole. But if you take a look at sort of much more objectively, I think you can also point to the government policies. You can look to what happened to the rating agencies. You can
That
look
would
at
include media?
would include media. Yes, I mean, I think there's a lot of culpable parties as to why we ended up where we did. It's not to say that the banking industry or the community is completely innocent. I think people have made mistakes, for sure. And I think it's really, for me, it's much more important to look ahead and say, what can we do to prevent such things from happening again, rather than saying we need a few people in jail, because that's not going to really solve anything. So that would be sort of my position on that.
Thank you.
Let me add a quick comment. I think, first of all, I'm very glad I'm not a banker, so I'm not being grilled. But the second question may or may not be relevant to this is this, in a legal term, there's an intention to commit a crime. And this is highly debatable, because when you go for a trade, whether it's 1 billion short or 100 million short, did you intend to incur a damage to the counterparty? If you can establish that, I think you can indeed prosecute that person. But if you cannot fully establish his intention or her intention to cause the damage, from a legal standpoint, it's very difficult to establish, very difficult to prosecute that person involved. So emotional is quite different from legal.
Let's take any other question? Right here, yes. Oh, you already got a mic,
I
so
got a mic.
we'll let you go. And then we'll go to you, I promise.
Okay. My question.
And then we'll wrap.
Thank you for the two panelists. And like Daniel's fund, my fund takes R&D and invests abroad, but we invest into Hollywood film.
Is this another commercial?
No, it's not. It's not. So my question is, how do you see the pace of China's outbound investment picking up in the next few years, given how fast the Chinese economy is growing? And what are the obstacles that you see of China's money going abroad? Thank you.
Yes. Well, perhaps I can mention a few things. I think personally from our, if I take a look at our own portfolio of businesses, historically, most of our advisory business revolved around foreign investors investing into China. But I would say over the last 2 to 3 years that has shifted. We are actually doing much more overseas M&A, outbound investments, and clearly I think that trend will continue and accelerate going forward. In addition, I think one of the speakers earlier talked about RQFI type product sets and so on. I think it's absolutely important to recognize that what it took the QFI about 10 years to build in terms of AUM took less than a year and a half to get to that in RQFI. So once that momentum builds up, I think the opportunities for outbound investments will be very, very dramatic.
Okay, last question, and then a really quick response to this question.
Hi, Mr. Yoon, Sean Maceros. This is not an advertisement. Question for you is this. I mean, during the financial crisis and preceding that, obviously, as a CEO, you've got a lot of asset allocation problems that you have to make. And I'm guessing in your position, it's more of a regulatory government type of a thing than it is an individual opinion. My question is this. As a CEO, you've got policy exposure, counterparty exposure, and on top of that, systemic leverage. With that, and with the net equity of the firm, how does your policy exposure specifically drive your asset allocation decision when building the business?
I think that could be a long answer, but let me take a crack at it.
Giving you 30 seconds.
Yes, very short. Bottom line, I think, looking at it from my point of view, there are certain things that are not negotiable, and that is regulatory risk. I think that bit is something that overrides everything else, so we make sure that in every jurisdiction that we operate in, we are compliant and we're doing the right things. Policy, I think, is a little bit more strategic in nature because, as we talked about, the policy discussion around China revolving around marketization of interest rate, liberalization of RMB, we just can't put a timetable around that. So we're focused much more on regulatory priorities.
Well, that's a show, folks. Thank you so much. Yuan, Daniel, thank you.
Thank you so much.
Thank you for your questions.